Hello investors, in this video I would like to discuss my style of investing. This is the value investing and I want to explain what is a value stock, what is growth stock, what is the problem with definition of growth stock, and what is the main concept of value investment. Okay, let's start. The main concept of value investment is that every company has intrinsic value that it can give to its shareholders. So every company has a price where you can buy the shares in stock, and on the other hand it can give you value. So the price, this is what you pay, and value what you get. So the price is known. The main problem is to find the intrinsic value. So from the point of view of value investor, all the stock universe is divided into two groups. In first group you can estimate the value of the company, of particular company, and in second group you cannot estimate the value. So measurability is the key component for value investor. How can you estimate the intrinsic value? So measurability of intrinsic value depends on proved business model. So first of all, the business model should exist, some business model. And what does it mean? It means that business models should be proved by fundamentals. Fundamentals, this is earnings and the cash flows. So there should be sustainable earnings, at least in the past, for some reasonable time. As for me, it's about 5 to 7 years at least. So based on this data, we can say that this business model is working business model. So we can estimate the value that shareholders get from this company. The whole universe, as I say, divided into two groups. First group is a value stock, where you can estimate the value, and the second is a marketing stock, where you cannot estimate the value. What is marketing stock? Marketing stock have such features like no sustainable earnings, no proved business model, no sustainable cash flows, and focus on revenue growth. From the point of view of value investor, you cannot estimate whether this stock give you some value or not. So we don't know whether this model will work in future or not. We have no enough data to make a conclusion that this is working business. So these marketing stocks are not fit for value investors. On the other hand, the value stocks have a proved business model, have positive sustainable net incomes, at least for some reasonable period in the past, and comprehensive source of earnings. This is the main difference between value stocks and marketing stocks, measurability. So you can measure, you can estimate the value in case of value stocks, and you cannot estimate the value in case of marketing stocks. Say some words about multiples. Multiples refer to price, not to value. So if we cannot estimate the intrinsic value of the stock, price is not important, because we cannot compare price with something we cannot calculate. So when we cannot evaluate the business, we cannot find the intrinsic value, multiples are not important. So value stock can have both low and high multiples, but is a second step. First step, you can understand whether you can find intrinsic value or not when you cannot find intrinsic value, multiples are completely not important. So value stock can be overpriced or can be underpriced, but we will know that only in the case we calculate the intrinsic value. In case we cannot calculate the intrinsic value, so we haven't enough data to calculate this, so we cannot say whether this stock is underpriced or overpriced. Some words about the growth stock. It's a widely accepted definition that there are some growth stock and there are some value stock. Usually the growth stock refer to stocks with high multiple and high growth, and value stocks with low multiple and low growth. But this definition is completely unclear for value investors, because when the stock have comprehensive value, it's already value stocks. So value is a mix of earnings and growth. It's like a hamburger. You know, you have a meat, you have a bread. So the value is consisted from earnings and growth. So why stocks with high multiple cannot be value stocks? It can. So it's not about multiple, it's about value, and can you calculate this value or not? This is very important thing about the value stock. So let's compare two stocks, Tesla and Facebook. Widely accepted that these both stocks are growth stock. But when you see the real performance of company, not of stock, but of company, you can see that Tesla, for example, has negative earnings for some 5 years. So we can say that Tesla has no sustainable earnings, has no sustainable cash flows, and this is the marketing stocks. We should base our estimation of this stock on words, on CEO, on some prospects, on some marketing materials, but not on the facts. So we even don't know whether this business model will work or not. But in case of Facebook, this is completely different situation. As you can see, this is very profitable business. So we can evaluate the level of value, the amount of value this stock will give to its shareholders. Yes, and you can see that for at least 10 years this is a profitable business. So this is a proved business model. So once again, Tesla business model is unclear for value investor. Facebook business model is comprehensive and clear. It is much easier to understand the shareholders' profit in Facebook than in Tesla. Facebook has sustainable earnings, Tesla has no sustainable earnings. Tesla does not fit criteria for value investor, but Facebook fits only by criteria of measurability. We are not speaking about evaluation, we are not speaking about whether this stock is overpriced or underpriced. We are speaking just about, can we measure intrinsic value or not? In case of Facebook, yes. In case of Tesla, no. So I give you some samples of value stock. As for me, it's like Facebook, Apple, Google, PayPal, and Visa. Sample of marketing stocks is Tesla, NIO, Virgin Galactic, Uber. The problem is that widely all these stocks are defined as a growth stock, not value stock. But from the point of view of value investors, these two groups are completely different. You can much easier estimate intrinsic value in the first group, but you cannot estimate intrinsic value in the second group. This is not estimation, it's more like guessing. We don't know whether this business model will work, because revenues and sales is not a sign of proved business model. Sign of business model is earnings and cash flows for some reasonable period of time. So what is the reason that you, from the point of view of value investor, you should calculate intrinsic value? So the reason is very simple. When you can compare intrinsic value to the price, so you pay less and you get more, you lower your risk. To compare these two numbers, you should calculate the intrinsic value. When you cannot calculate the intrinsic value, you cannot estimate your risk. So risk will be much higher in case you cannot estimate intrinsic value. So this is the reason why value investors are focused on risk and focused on long-term return and trying to estimate intrinsic value of a company. So let's quote Warren Buffett, and he said that there are all kinds of businesses that Charlie and I don't understand, but that doesn't cause us to stay up at night. It just means we go on to the next one, and that's what the individual investor should do. So you should completely understand what you get when you pay your money for some shares. To understand that, you should understand what value can you get for your money. So you should understand the intrinsic value of the stock. In case of marketing stock, value investor cannot understand intrinsic value. In case of value stock, value investor can understand intrinsic value of the stock. Key factor is understanding the way the company adds value to business as the key feature of value stock. When the company adds value to its business, this is working business model. So working business model, this is a profitable business model. When you have no earnings, have no sustainable cash flows, you cannot say this is a proved business model. And your risks are pretty high in this case. So value investment are focused on proved business model, so you can lower your risk. Thank you very much for your watching. This is the first video that dedicated to value investment approach. Click like button and subscribe.